All right, well, I'm not in the office this week, but I wanted to make sure that I still got this market recap from last week out. So bear with me, and here it is. All right, weekly recap. So it was a strong week for major U.S. indexes. The S&P 500 rose 4.6%. The NASDAQ gained 6.73%, and the Dow Jones advanced 2 point. We have growth stocks, so the Russell 1000 outperformed value stocks. Russell 1000 value, right? Rising 6.78% and 2.31% respectively. Small caps had their best week since January, climbing 4 points. So gold, meanwhile, paused its rally, full stop, ending the week slightly lower, but still up 24%. Now, in housing, home sales posted their worst March since 2009, as rising mortgage rates and economic uncertainty kept buyers on the sidelines. So similarly, sentiment data released on Friday came in weaker than expected, reflecting growing concerns about just overall economic outlook. Right? Upcoming economic releases. So this week brings us a wave of important economic data. A lot of things that we've been kind of waiting for. The key reports will provide a fresh Russell 2000 growth outlook and will just kind of show us, hey, what is going on? And are these U.S. corporate insights into inflation, into gross domestic product, GDP, and labor market on Tuesday, April 29th? This will give us a lot more information of kind of what's going on, what's expected. Are these U.S. high yield reports, will they offer an updated view of labor market conditions? On Wednesday, April 30th, fixed mortgage investors will receive the first estimate of their first quarter 2025 GDP, as well as the PCE report that will give further clues about the inflation outlook. And on Friday, Friday, May 2nd, new unemployment data will be released. Now, our market outlook with major U.S. indexes found some relief last week after the president ensured his respect for the Federal Reserve's independence and signaled that the trade talks with China and countries are progressing in a manner that is suiting his agenda. While no major agreements have been finalized, the market interpreted these developments as a sign of easing and definitely created some confidence to kind of go back into that, right? This eased tensions, helping indexes finish the week in a positive territory. Now, we have unemployment rate, right? Everybody's been talking about this. I put out some content about recession versus depression so that we could kind of understand this. Our real GDP, wage growth, retail sales, meanwhile, it is earnings season. Everybody's going to start reporting stuff to kind of see what they're doing. As the busiest period of reporting gets underway, earnings growth projections have improved. As of Friday, first quarter net income was expected to rise an average of 10.1% year over year, up from a 7% growth forecast just a week earlier. Now, yeah, it's a busy week, right? It's a busy week, especially for investors, with a full slate of economic data and releases more high-profile earning reports. Let's talk about notable companies, right? When we say high profile, we're like, well, who? How about Visa, Microsoft, ticker MSFT, Amazon, ticker AMZN, and Apple, ticker A, are among some of the big dogs that are reporting, right? News, Alphabet, GOOG, reported an earnings beat last week and highlighted its full stack approach to artificial intelligence or AI. All major business segments, cloud,